What would happen if the world started dumping US debt?
For decades, the United States stood at the center of global finance.
Whenever America needed money, the world was willing to lend.
Over time, the debt began to grow faster than anyone expected.
A significant share of this debt is held by foreign governments.
China quietly begins reducing its exposure.
America's closest allies begin asking difficult questions.
As selling accelerates, interest rates surge.
Higher rates quickly reach everyday households.
Debt servicing begins to overwhelm government finances.
When confidence breaks, the shock spreads worldwide.
In Europe, leaders quietly explore life beyond dollar dominance.
Most US debt is held by private institutions, not governments.
Selling US debt comes at a steep financial cost.
As trust fades, collateral across the system begins to fail.
The mechanics look disturbingly familiar to the last global crisis. Power no longer comes only from armies, but from balance sheets.
When military options fade, financial tools remain.
Markets punish instability without emotion or hesitation.
When trust fades, money seeks something tangible.
Gold rises when confidence in governments falls.
The dollar's dominance depends entirely on trust.
The global system begins to fragment into multiple centers.
I'm just surprised.
Financial pressure quickly becomes political pressure.
Eventually, the bill must be paid. In the modern world, finance has become the battlefield.
Modern finance runs on confidence more than cash.
Even the most powerful economies face limits.
Higher borrowing costs quietly slow economic growth.
Economic instability eventually becomes social instability. The system adapts, but stability is never fully restored.
Central banks are forced to react, not lead.
As trust fades, liquidity disappears.
Higher rates make expansion harder to justify.
The fallout reaches far beyond the United States.
Debt becomes leverage without a single shot fired.
Higher interest costs limit government support.
Markets adapt, but never forget the shock.
cheap money becomes a thing of the past.
The financial world becomes more fragmented and more cautious.
In global finance, trust is the most valuable asset of all.
After the shock, markets search for a new rhythm.
Risk is repriced permanently.
Even by heaven, she said.
Thanks. For households, cheap credit is no longer assumed.
Policy choices grow harder as options narrow.
The global system moves forward, but with less margin for error. Investors learn to move carefully in a more fragile system. Reform replaces emergency as the priority.
Borrowing becomes harder, but more sustainable.
The system absorbs the lesson and hardens itself.
America remains central, but no longer unquestioned.
Stability returns when cooperation replaces confrontation.
The crisis becomes a reference point, not a repeat.
Speculation gives way to restraint.
The adjustment was costly, but unavoidable.
In the end, the system becomes less fragile and more truthful.
Crises fade from headlines, but not from memory.
Capital grows more cautious and more selective.
Trust remains, but it is no longer automatic.
Safety is redefined, not abandoned.
The dollar adapts rather than disappears.
Trust now comes with conditions.
The system slows down and grows stronger.
The lesson becomes policy, not memory.
Finance matures under pressure.
No asset is risk-free forever.
Resilience replaces speed as the priority.
The system learns to absorb fear.
Global finance becomes a shared responsibility.
Stability returns, not loudly, but durably.
A new generation grows up, shaped by instability.
Risk awareness becomes part of daily routine.
Markets become quieter, but more reliable.
Rules replace panic as the first response.
The illusion of perfect safety finally disappears.
Stability remains, but without illusion.
When finance becomes boring, stability has returned.
Capital spreads risk instead of chasing certainty.
Confidence returns, but complacency does not.
The system remains under constant watch.
Debt is no longer immune to scrutiny. Stability matters more than headlines.
Prices reflect reality more clearly. Power shifts, but the system endures.
Each generation inherits the lessons of the last. The world moves forward, wiser and more cautious.
Caution is no longer reactive, it is routine. The era of market mania fades.
Risk is always priced, never ignored.
There are no financial absolutes.
Stability endures when awareness remains.
Markets learn humility after excess fades.
Systems matter more than personalities.
Crises become rarer, but preparation deepens.
No single hero holds the system together.
Capital remembers what panic costs. Overconfidence becomes the first warning sign.
True stability often goes unnoticed.
Finance returns to serving the real economy.
Trust returns, cautiously and conditionally.
The strongest systems are those that remember.
Stability now requires maintenance, not emergency.
Markets move together, more aware of shared risk.
For most people, the system fades back into the background.
The focus shifts from survival to sustainability.
The system endures by remembering its limits.
Stability is guarded quietly every day. Markets move with shared discipline.
For most people, stability feels ordinary.
Planning replaces improvisation.
Balance holds through awareness.
Start with bessen.
The lesson is passed forward. Limits make stability possible.
Finance serves the economy, not the other way around.
Trust endures when accountability remains.
Awareness becomes the system's strength.
Stability is maintained through attention, not force.
Markets operate calmly when fear is no longer dominant.
For most people, stability feels invisible.
The system survives by accepting its limits.
In the end, awareness, not power, keeps the system standing.